Today we're diving deep into the saga of WeWork, one of the most talked about companies of the last decade. WeWork's story is filled with everything from outsized ambition to shocking revelations, from massive valuations to an unbelievable fall, and ultimately a second chance via SPAC. We're going to explore how Adam Neuman's grandiose vision supported by SoftBank's billion-dollar investments turned WeWork into an empire and then nearly destroyed it. From the perspective of founders, funders, and market watchers, there's a lot to unpack here, so let's buckle up. Adam Neuman grew up in a kibbutz in Israel, which helped shape his idea of community and collective success. After a stint in the Israeli Navy, he moved to New York, where he attended Baruch College and dabbled in various business ventures, including a baby clothing company with knee pads, an early example of Neuman's ambitious yet quirky approach. While none of his early ventures found real success, he eventually met architect Miguel McKelvey, with whom he shared a vision to create a community-oriented workplace that could serve as a home base for entrepreneurs in major cities. Neuman saw that young startups and freelancers needed flexible, well-designed spaces that traditional office leases couldn't provide. With McKelvey's help, he launched Green Desk, a sustainable co-working company. However, Neuman sold it and put all the energy into WeWork, launching in 2010 with the first WeWork office in the Soho neighborhood of Manhattan. Neuman's ambitions for WeWork went far beyond real estate. He believed he could create a global community of entrepreneurs, a we society. He preached the idea that workspaces could foster personal and professional growth, and WeWork's early success proved the demand for flexible workspaces was high. The culture Neuman cultivated was unique, blending startup energy with the carefree atmosphere of a social club. He encouraged employees to live by WeWork values that emphasize connectivity, enthusiasm, and risk-taking. Company-wide events like Thank God It's Monday parties featured loud music, dancing, and drinking, infusing the space with a youthful vibe that made WeWork feel more like just a job. Employees would participate in parties, yoga classes, meditation, and motivational talks to emphasize that WeWork was as much of a lifestyle brand as it was a workplace. However, Neuman's focus on culture sometimes bordered on the extreme. According to reports, Neuman had grand visions, including trying to make WeWork the first company on Mars and buying properties around New York City to expand his empire. He even discussed creating a We-branded elementary school called WeGrow, which he hoped would foster his ideals in children. This visionary mindset made Neuman something of a messiah figure within WeWork. However, it was also what would lead to both incredible success and significant risks that would challenge WeWork's viability as a company. Neuman's drive and charisma attracted early investors, but none was as impactful as SoftBank's Masayoshi Son. Known for his massive vision fund, which invested in high-risk, high-reward ventures, Son was captivated by Neuman's vision for WeWork as a transformative force. When Son and Neuman met, Son famously advised him to be crazier, encouraging Neuman to think beyond co-working spaces and consider even more grandiose concepts. SoftBank poured nearly $10 billion into WeWork, making it one of the most well-funded startups of its time. This allowed WeWork to expand rapidly into cities around the world, offering prime real estate to startups, small businesses, and even Fortune 500 companies. WeWork's valuation skyrocketed, reaching a staggering $47 billion by 2019. But this growth wasn't organic. It was built on aggressive, costly leases and an unsustainable business model, which would become glaringly evident when WeWork tried to go public. Son's philosophy was that big bets yield big rewards. However, his funding and advice pushed Neuman toward high-stakes decisions that ignored financial stability in favor of rapid global expansion. This would come back to haunt both SoftBank and WeWork as they prepared for an IPO in 2019. In 2019, WeWork announced plans for an IPO, intending to capitalize on its massive valuation, become the next unicorn to enter the public market. However, the IPO prospectus quickly exposed WeWork's financial instability. The filing revealed losses of $1.9 billion in 2018 alone, driven by Neuman's costly leases and frequent business pivots. The prospectus also revealed unusual financial arrangements involving Neuman, such as trademarking the term "we" and leasing buildings he personally owned back to WeWork, which represented a conflict of interest. Investors quickly lost confidence. Neuman's super voting shares gave him almost absolute control over the company, and WeWork's loose spending practices were alarming. Stories of Neuman's impulsive behavior also began circulating. For instance, he reportedly brought tequila into board meetings and chartered private jets to travel the world, at one point flying back to the US with an international supply of marijuana that nearly caused a legal incident. One particularly notorious story in Neuman's travel extravagance included one private jet flight from New York to Israel, where he reportedly smoked so much marijuana that the crew found it impossible to continue without being impacted. After the flight, Neuman's jet was grounded while the pilots arranged for the marijuana to be removed, a situation that alarmed the board and investors. This reputation for excess became emblematic of WeWork's culture. Employees felt caught in a world where huge resources were allocated with little oversight. Staff turnover was high, and former employees would later describe the WeWork culture as bordering on cult-like, with loyalty to Neuman as the de facto rule. As pressure from investors mounted, Neuman's control began slipping. In September 2019, just weeks before the IPO, WeWork's board, under pressure from SoftBank, forced Neuman to step down as CEO. SoftBank and other major shareholders concluded that WeWork would never succeed with Neuman at the helm. To make his exit more palatable, SoftBank provided Neuman with a $1.7 billion package, including loans, stock options, and consulting fees. Neuman's departure marked the end of an era at WeWork. The company's valuation fell from $47 billion to around $10 billion as SoftBank attempted to salvage its investment. WeWork was left with massive portfolio and expensive leases, half of which were underutilized. After Neuman's departure, Sandeep Mathrani, a seasoned real estate executive, was brought in to stabilize WeWork. Mathrani took drastic measures to trim costs, scaling down operations and renegotiating leases. The timing couldn't have been worse. COVID-19 hit shortly thereafter, driving demand for office spaces to historic lows. Despite the pandemic's challenges, Mathrani continued with restructuring efforts. The company closed underperforming locations, reduced headcount, and renegotiated lease terms to adapt to the shifting office landscape. Mathrani's efforts allowed WeWork to pivot from its original mission, now focusing on long-term sustainability and reducing spending. As WeWork tried to regain stability, an alternative route to going public emerged. By 2021, SPACs, or special purpose acquisition companies, were becoming increasingly popular. Similar to the reverse mergers popularized in the 1980s, SPACs offered a faster, less scrutinized pathway to public markets, which was perfect for WeWork given its shaky history. BowX Acquisition Corp., a SPAC founded by Vivek Ranadive, offered WeWork a way to sidestep the traditional IPO process. Through the BowX SPAC, WeWork was valued at $9 billion, far below its peak, but enough to give it a fresh start on the public market. WeWork's SPAC deal generated $1.3 billion in new funding, allowing the company to focus on profitability and business adjustments in a post-pandemic world. The WeWork story serves as a complex case study in venture capital, corporate culture, and the pitfalls of unchecked ambition. Neuman's vision inspired thousands of employees and turned WeWork into a global brand, but it also highlighted the dangers of founder worship and lack of oversight. For SoftBank, WeWork's troubles were a reminder of the risks associated with chasing unicorns and heavily funding founders based on charisma rather than financial discipline. Despite its public listing, WeWork continues to struggle with profitability in a post-pandemic world. The WeWork saga is both a cautionary tale and a fascinating story of innovation, ambition, and excess. It highlights the fine line between vision and delusion and how high-stakes decisions can both build and destroy empires. As we watch WeWork's ongoing journey, it will be interesting to see whether the company can achieve the sustainable success that Neuman once promised, or if it will remain a testament to the dangers of unchecked ambition in Silicon Valley. Thanks for listening, and stay tuned for our next deep dive.